Sandy, how you doing? How was your fourth?
Good morning. Good morning. Great. How was yours?
It was great. I saw one hand there. It looked like you had all five fingers. How about that other one? Bang, she did it. We came back with all 10. Let's go, Sandy. What do you got coming up here?
Yeah, because that's me, lighting fireworks.
No, you never know. I don't assume that's how you make an ass out of you and me. So,
No, good. Hey, we're going to talk about, you guys were talking about Bitcoin
yep.
and some of the run up. I'm going to share some information with the audience in regards to option flow and see which tickers some of the and then look at the charts and see what we can do.
Perfect. That sounds timely and awesome. Folks, Trading Made Simple with Sandy starts right now.
Welcome back, traders. This is Sandra with Trading Made Simple. Morning. Hey, so we had some good price action this week, hitting a lot of real bullish targets. Okay, so today what we want to do is take a look at what's going on with some of these Bitcoin stocks. And so I was looking at some option flow and I saw a lot of flow coming into Bitcoin. In fact, that ticker was ETHW, ETHW. And here it is, Bitwise Ethereum. I can never say Ethereum very good. This F right here has had a lot of flow coming into it. And so as I take a look at that flow, I want to share with you what they're looking at. And I mean a ton of it. I'm seeing gold, I'm seeing silver, but twice as much, 3 times as much is going into ETHW. This for Bitcoin Ethereum. So we're looking at 22 calls for September 19th. We're also looking for, January 16 for 22 calls. When they got it was priced at 429, 430 thereabouts. And I'm just going through orders. Here's a gold order at 320 call. It cost them $5.90. This is for September 19th. Let's do another one here. Once again, another 22 call for ETH. Look at some of the silver, and it just goes on and on with the amount of orders. And the amount of orders that they're doing is 343,000, 386,000, 472,000, 558,000, 624,000, 710,000. And these orders keep coming in. So as we look at this chart, let's go ahead and talk about this chart and say, hey, what's going on here? Well, what ended up happening is, on a daily chart of this ETF, we were kind of for a while there going in a range. We actually broke through that range and then basically, right, we were just kind of consolidating again. Well, what we did was break out. So we had a double top, we broke out of it, and you can see that we broke out of last week's high. Now, this is the expected move for last week that the market makers created. We broke out of that high. Typically, when we break out of that, that means the next following week, we could get higher highs. And I think maybe that, along with the volume of orders are coming in, these algos, they keep buying and buying. And clearly, we got something going on here. So 22 calls at 430. So you could see my weekly expected move on this indicator, by the way, is showing that if we bypass today's closing price over the weekend and open up higher than what we did today, we have a good shot of basically getting to 2274. Now, the call that they chose, right, was 22. And so we want to keep that in mind as their target, even though right now it's at 2142. We could see that momentum on a daily chart is hitting 200. It hit 200 before as it was breaking through. You'll notice right here and right here, as we were breaking through the high just a couple days ago of this week's expected move high, you could see the momentum really coming back in and now going higher. Now, we also have a Darvis band. Darvis is really identifiable with consolidation. And you could see that the Darvis band has been here for a while for this range, right? 1561 to about 2058. As soon as we broke above it, you could see momentum starting to break above the 200. I always say that, hey, look, when you're looking at the CCI, or this is a proprietary indicator called the wave, you can see that when we break momentum, so any momentum-based oscillator, if we're breaking through that first 100, then we're getting into a trend. You have momentum behind you. And as you can see, as we stumbled and chopped around right here just a little, as soon as we broke above that 100 line, you could see then this ETF, right? And this is just a low-cost ETF breaking through this week's high. And now its momentum is again breaking through the 200 line. This really is considered a strong trend. So as we break through the 100 line, that's a trend. Now we're breaking through the 200 line. So really looking for these types of stocks to, maybe take off next week. Now, this is low cost. It's an ETF, so it's a basket, right? So this is a really nice way to enter the market very inexpensively. And so I would take a look at this W going for 21.47. The price that it looks like these institution high conviction is taking is the 22 call. That was going for about 430, 420 this morning. Let's take a look and see what it's going for now. So as we look at the expiration, and it looks like January 26 is real popular right now. So let's take a look at January 26, 189 days out. Let's take a look at a single, looking for the 22 call right here. So it's still around the 430 level. Now you'll notice that the bid and the ask, right, a little wide here for this ETF. But why is that? Well, let me explain it. So we do have it a little wide. It's $20, right? From the sell to the buy, you're looking at a $20 difference, 410 to 430. Now, the reason is because the volume is less than 1 million. So I want to tell you just this little secret here. Sometimes these types of ETFs and stocks, what they'll do is they'll increase in volume as the day starts to go on. So maybe afternoon, you'll see this volume start creeping up. Now, I often tell our clients, hey, look, if the volume is less than 1 million, then sometimes it'll be difficult to get in and out. If you got in and you want to get out, you may have to lower your price to get out just because the volume isn't there. The market isn't packed with this ETF, but we have so much option flow coming into this. I would really pay attention to this and maybe give yourself a little bit of risk on this ticker to see what ends up happening as we move into the next couple weeks. So this volume may increase. That's really the time where getting out of a position is so important. I used to call this Hotel California. You can check in, but you can never leave. This one's got almost about $500,000. And you always want to, as you look at it, if we look here, open interest and volume, and you see how there's a lot of NAs here. Now, I know that thinkorswim had some issues today. My platform right now, I'm crossing my fingers, stays up. But as of right now, you can see that there's a lot of NAs here. And you can see that there's like low open interest in a lot of these contracts. And you could also see that a volume also has a lot of NAs. So you really want to stick to the one that has more than 100 contracts, either open interest or in the actual volume. And the reason being is because that's where the marketplace is. So if you're at a farmer's market, as an example, and you're looking at some oranges, but no one is behind the stand, then that means that you can't buy anything. And if you had some to sell, you wouldn't be able to sell anything to this guy because he's not standing there. There's no one there, right, to assist you. And that is the same when it comes to options trading. You need to make sure that you have enough of an audience that you can buy as well as sell to close your contracts. And if you don't, then you're going to get yourself in a little ringer. And we call that Hotel California. You could check in, but you can never leave. And so that's my joke for volume. If you can just view this, some ETFs and stocks, they'll just actually, their volume will start to rise as the day goes on. And so that may be something that this does as well. This is the first time that I'm actually identifying this ETF. It's not popular to me, by the way. And so, but I just noticed it on option flow, a ton of high conviction option flow. And so I wanted to share that with you today because I thought it was a good one. So we'll have to keep it in mind for next week and see how it moves. But you could see that all the interest is where? at the 22 call, and that is the call that they chose. So let's keep that in mind. We really want this volume to increase. The other items that I saw of interest were not actually gold miner stocks, but also the ETFs. Let me pull up one of those. SILJ is what it's called. So this is actually just a silver miner ETF and called Amplify Junior. Look at the volume here, guys. 6 million. Don't have problem with getting in and out. No Hotel California here. But you could see it's hanging around the 1577 for price action. The real popular ticker here was 16. 16 for, let's see the date, August 15. So let's take a look at August 15 and see what that looks like. And we're looking at the 16 call for 85 cents. They got it for 75 cents. So you can see, and look at where all the volume is here, guys. This is the volume, 25,485 and open interest. We do have some higher areas of open interest, but clearly, whenever you're looking at a strike price, so let's get to this lesson really quick, not only for volume, but for strike price. As you start to get more familiar with strike price and option chains, you really want to pay attention to the volume and open interest. You have to have at least, and this goes for SPX, any ETF, you could look at any of these tickers or stocks, and you really want to look for volume over 1 million. And you also want to look for a strike that has some volume, either volume or open interest, at least 100 contracts. 100 contracts. So as we take a look at this, we can see that open interest and volume really nice at 16 here. And so we really want to take that into consideration. Could we use the 17 call? Yes. Could we use the 18 call? Yes. Why? Because we have over 100 contracts. If you can just keep that in your mind, you'll never get locked into a position where you can't get out of a position. This is really one of those lessons that you learn by losing money, right? So I've already been there. I'm helping you to stay away from that. The volume, you want to look up here, over 1 million to stay out of Hotel California. And then your contracts, either open interest or volume, you want to make sure that you pick a strike that has more than 100 orders in it, either on open interest or volume here on the strike price. I hope that helps you guys out as you're looking at maybe ETFs or stocks that you've never seen before. What was the other one that I saw today? And then there was some for gold. Let me tell you what gold was. So this is very interesting because we've been so bullish, right, this week, a lot in the tech stocks as well, materials. And all of a sudden, we're seeing Bitcoin and silver and gold pop up. March 20th, 2026. So this is a long play. I call this, whenever I see something that is way into the future, right? It's kind of a placeholder. It's something like a protection. It's somewhere that you can park money at for a long period of time without very much damage. And so when I see this, that's what makes me think of this. So as we take a look at that, somebody's doing a $150,000 placeholder, not too much on that order, and looking at March 20th of 2026, and it's GDX of 55 call. Let me first take a look at the silver miners. Oh, also momentum on a daily, right? Breaking through the 200. Why? Because the last pivot high was right here at 1554, and we broke through that. Now, remember, whenever we break through a resistance, a hop, we typically come down to retest it. Could that be then the better entry? Absolutely, the better entry. So as you see something like this break above, if we could come down and retest that 1554 area, that's actually a better area to take a long position because you got that retest out of the way. A lot of these, big pockets, they don't care about holding through a pullback. But as retail traders, we care, and we care quite a bit. We don't want our position to go 25, 30% lower before it goes up higher. So if you're one of those people, then you may want to take a look at the retest. If we look at this on an hourly, which is really pretty, you can see that we kind of consolidated after hours. We opened up the first candle on a 1 hour was a lot of indecision, by the way, here. That's what this candle represents. As we broke through that pivot high, you can see then we caught a bid, right? I mean, just really a nice engulfing candle. continuing to move to the higher direction. But what do we have right here on an hourly? We have resistance. These are trend pivot lines, right? They're trend lines. I love these vertical trend lines. So here's the horizontal pivot. You can see it, it's green underneath that white line. So you can see where a lot of indicators actually have confluence, right? There's stacking evidence here showing this particular area is really being important. And then all of a sudden we have a breakthrough. And once we break through and we're not hanging on to that level, that zone really shows the conviction of the move. So as we see the conviction of the move, just remember that oftentimes when we break through, we'll come back and retest. Looking at the 1550 for a retest. And then as you can see, we have this trend pivot line at around 1598 up here. It's about 1591 right here. This is going to act as resistance. Keep that in mind as well. Though it's about 20 cents above us, this could also act as resistance. But really looking strong here for the silver miners. May take a little while. It's not a heavy mover. If we take a look at the trade tab and see, okay, well, they're taking August. What's the expected move for August? And when I said they're not a, heavy hitter, I mean, like this F doesn't really move a lot. Its average true range doesn't move a lot. So what we can do is take a look at the trade tab, go all the way to the right over here, and we could see for that strike that they're looking at, for that expiration date, they're looking for a $1.83 move from now until 35 days from now, right? That's only a $1.83 move. And so you could see that this is a very slow mover. And so keep that in mind when you have your expectations in check. That means that you create a better plan of action for your trading, right? You got your expectations on point. So we're only looking for about $1.83 for that move for that period of time. And so we want to stick with that. And then once again, as we take a look at the chart, we do have some resistance. Let's take a look at a weekly and how this looks. So at a weekly also, breaking through the double this week, breaking through the double top right here and creating basically a higher high. What happens? I mean, that is a very well-known strategy if you don't know it. When you break the existing high that's been placed or the previous high, that ends up being a double top until you break it. And when you break it and you're making a higher high, that is a strategy that the stock is or ETF is going to go higher. And that's exactly what we're seeing with institutional flow because we're trend traders, right? Trend. And who makes the trend? These institutions with all the large money make the trend. And we're just following that trend. You can see where momentum on a weekly was in the 100 kind of choppy zone, but as you can see, it's kind of inching up this week above that 100 line. You can also see that momentum looks a little level here. So really looking to see next week that this starts to point up, right? We want momentum to point up. But again, even on a weekly level, we have this resistance at 1657. You may want to think about that as a place to take profits, right, guys? Always resistance is a place to remove some of your profits and then reassess. Because is this going to have a pullback to, the horizontal pivot line right here? Is it going to come back and do a retest of this level? It could. So, oftentimes these stocks do that. So I think that we covered SILJ pretty good. The other thing I wanted to talk to you about today was the VIX. Now, the VIX, let's take a look at this. As you can see, the VIX on a weekly, right? Really crushing. VIX is crushing down. What is VIX? VIX is the volatility gauge, right? This is where all the fear is. When the fear is in the market, the VIX rises, and it's actually identified visually as a chart, just like anything else. So as we take a look at the VIX, you can see that we actually, from yesterday's close, this is overnight action. From yesterday's close, we gapped up, right? Whenever we gap up means we're going down in the stock market. If we gap up on the VIX, if the VIX moves up, it's an opposite indicator for the market. It's opposite. So as the VIX is moving up, market's moving down. And as you can see, we're coming down to basically retest the low here, this area. This On a smaller chart, you don't really get to see, but let's take a look at here. So here was the low, the market makers expected move low for the VIX, and that was around 1592. And we actually broke through it yesterday and got a really nice pump in the market, didn't we? Because it looked like, because you could see how many times the VIX, if we just look at this as a regular chart, you could see how many times we came down, retested it, went up, retested it. Look at how many times it keeps hanging around this level. So yesterday when it broke through, we really got a nice pump out of that, thinking VIX is going to crush lower. And what ends up happening? The opposite actually goes up overnight, right? And so now we're kind of basically back into the market makers' expected range here. Now we're sitting underneath the 20, which is bearish. We have momentum that's bearish, and we're also underneath the low pivot from our last point, because you can see that this area was really important. And we're still underneath it, which is very bullish for the market, okay? If we stay underneath the pivot low, this is very bullish for the market. And if next week we go and retest 1488 and it goes lower, oh, we're going to have a heck of a week. But if this starts to move higher and go back into its range, into the range of above this last pivot low, then we may end up retesting 1768. And as VIX moves higher, that means the market will move lower. I also like to take a look, and you can kind of see momentum. Why do I look at momentum? Momentum drives the price of any stock or ETF. So if you can have an oscillator on your chart that you can visualize, to me, learning and identifying moves helps me to visualize. That's the type of learner I am. You may be a different type of learner, right? So for me, if I can see that momentum is going down on the VIX, that gives me an idea, right? That, hey, the market could be going up. So I'm not as concerned about puts as I am my calls. Now I'm looking for really good setups for calls, right? But if we all of a sudden break through this 100 line by next week, that means that momentum for the VIX is going higher. And heavy volume into the VIX means that the fear gauge is rising. And if the fear gauge rises, the market will tend to fall. That's when you can create a strategy by identifying where the VIX is, looking at it just like you would a normal chart, and then saying, hey, I'm in some long call positions. Time for me to take some profits off the table and reassess once the VIX gets back to its normal consolidating pattern, as an example. So we had a boost after hours on the VIX. Then the VIX right now is calming down. Let's look at it on a 15-minute. We had an overnight pop on the VIX, but ever since the open, it's been actually slowing going down. And so that helps the market to recover. Right now, we're filling a gap. This was the gap that was created overnight. Can we fill that gap? Absolutely. I don't know if we'll fill it by today, but you can see we're working on it. We went from 1660 thereabouts. 50% is right about here. So that's around 1619. And so we don't have to fill the entire gap. But typically speaking, if we fill a 50% on the gap, people seem pretty satisfied with that. It's like we filled kind of half of it. We went through half of it. So I can see this actually coming down possibly to the 1619 area thereabouts. And if that ends up happening, we could see a little bit of a reprieve. Now, could you set an alert for VIX? Because I think VIX is one of the greatest, easiest indicators or chart setups that you can identify as an indicator that could help you, right? And all you need to do is set an alert. Say, hey, look, and you know how I feel about the 20 EMA. Anything over the 20 is bullish. Anything underneath it is bearish. If we break above 1660 on a 15-minute chart, as an example, should I be concerned if I have any longs going into the weekend? Absolutely. I would be concerned about that. 15-minute, 1 hour, those are really nice short-term swing kind of positions that you could utilize those two charts. especially if they match up. And so I would really like to see if price action gets above that 20 on this chart. And if so, then I want the system to send me a text to let me know that. And then that will draw my attention to, okay, let's clear the screens here. Let me, any, winning positions, I want to take money off. I want to start closing positions. This gives you a management tool, right? So I would really start utilizing VIX. You can see that I have it in a label form just because it's always on my mind. Regardless of any chart I go to, the VIX is always on my mind by staying right there on any time frame. So if some of these indicators are interesting to you, send me an email at sandra@tradingmadesimple.org. I'll get those over to you. I think that these are some of the real basic tools that you could use in your everyday analysis as you're checking out the charts. So the VIX to me, really, gosh, if we can break, and this is really important, right? Because as we look at the VIX in a range, we can see that the VIX's low is right where this trend line in, as well as this low pivot line. That's at 15, what is that, 70, 69. Let's just call it where this trend line is. If the VIX can break below 1560, then calls are on the table for the market, right? So as of right now, we are technically bearish on the VIX. VIX is lightening up a little. We could take a pop. If we take a pop above that 20, it means, hey, my calls are invalidated in the market. I may want to reassess this, okay? And so this is a very news-driven type of market. Any tweet, any tariff news could change, right, in a heartbeat. And so knowing that and utilizing some of the tools that your platform already enables you to do, you can start really automating your trades. You can even automate a close of a trade based on, the VIX levels and other indicators. And so as you learn your platform, and by the way, that's exactly what I do is I teach others about their own platforms with thinkorswim and IBKR, how to automate your trades. And you can utilize the VIX and other pickers to basically set up trades to get into in an automatic sense, right? You're really just doing an OCO order, getting in, getting out when certain conditions happen. So your rules are already placed up front. You'll let those rules happen. You program them in very simply. I give you step-and-step instructions. You want to learn more? That's tradingmadesimple.org, and I will see you next week.